Gold price is trading around $1,900 an ounce, so should you buy gold stocks? Now, Tom, in general, gold stocks have really lagged the metal of late. Investors seem to want to buy those physically backed ETFs instead of the miners, but the miners have recently been picking up steam. What kind of leverage are you looking at going forward? Are we looking at 3-to-1, 2-to-1?
At minus, we prefer the higher quality companies. Then you get the pure uplift from a gold price increase rather than have to suffer through a management mishap with a lower quality type of company.
But you don't get the kind of leverage though, right?
You don't get the leverage, so there is a trade-off. But
Mm-hmm.
the thing that's interesting at this point is that even the higher quality companies are making amazing cash flows, which I don't think is factored in by the street.
Now, I do want to touch on some negatives, though, for the miners. You already hinted at them. You know, they do have high input costs across the board. It just depends on how the company's managing them. We do see a lot of geopolitical issues. We just heard that Hugo Chavez is going to actually nationalize all the gold mines in Venezuela. And some miners are now missing their production targets. So why bother? Why not just go with regular gold?
Well, regular gold has some nice attributes to it, but that probably was the place to be for the last, say, 6 months, a year, as the equity markets have suffered in the face of the general economic malaise. At this point, the gold miners have been sold way down, so the opportunity is there, I think, in the mining sector rather than the gold itself. Newmont at 6 times next year's cash flow is an extraordinary thing. And over the last 10 years, it's probably averaged closer to 15 to 20 times cash flow. So amazing valuations with a lot of upside.
I know one of your other favorites is Eldorado Gold, but are shares too expensive right now at this price?
It's one of the most expensive out there. And what the trade-off, though, is very high growth and a super high quality management. Paul Wright, we've known at Midas for over 10 years now, and he really tends to over deliver and under promise. I think it's going to be a lot more growth than the street expects, so that what looks like an expensive price now, I think it's going to become a value over the next 2 or 3 years.
So over deliver and under promise, something that Goldcorp did not do for its last quarter and going forward, but it's still one of your favorites, the largest bet in the fund. They had a really rough quarter. They're not going to make their production targets for 2011. It seems like in order to bet on the stock, you have to be a believer in the CEO and that he can get the Penasquito mine, the very large silver and gold mine that they have, under control by the end of the year. Why are you so convinced that's going to happen?
Well, Chuck Johns has had a misstep. It's one of his few. I think his management team, though, is very deep. The nice thing about Goldcorp, and the reason why I think it's going to receive a premium valuation in the market, is that it has super high growth for a major. Plus, it has very low political risk. So the mine you mentioned is in Mexico. Its other main mines are in Canada. They have some mines in other parts of North America and Central South America. They don't have exposure, though, to Asia and to Africa, where I think a lot of problems are going to start arising as governments find themselves cash strapped and they're looking to these very high commodity prices where they can either expropriate the mines, as you pointed out with Chavez, or simply increase taxes to essentially confiscate the proceeds.
All right, thanks, Tom. I appreciate it. So gold stocks have underperformed over the last few months, but is it their time to shine right now?